If you feel like you're staring at a chart full of squiggly lines and you've got indicator overwhelm, then this video is for you. When you first start trading, it can feel like a bit of a minefield knowing which indicators are actually helpful and which ones are just going to hold you back and waste your time by learning. So indicators are trading tools which traders use to help them gauge different aspects of the market to help them make buying and selling decisions. So for example, you could get an indicator which can read trend strength. You could get an indicator which helps you to read volatility, or an indicator that helps you to gauge momentum. And a lot of the time when new traders start, they almost use too many indicators. But the truth is, you only really need a handful. You don't need 5 indicators that tell you trend strength. You don't need 5 indicators to read volatility. You just really need one of each. And it also depends on what strategy you're using. So I would say, look at your strategy, decide what 2 or 3 things you really need to gauge with your strategy to help you make a decision, and then look for an indicator which will help you to read those. So for example, if you're a trend trader, you might need an indicator to help you gauge trend strength, and you might need a volatility indicator to help you with your stop loss and your take profit. If you're a reversal trader, you might need an indicator to help you gauge momentum so that you can tell when the market is reversing. In this video, we're going to look at 5 beginner-friendly trading indicators to help you get started on your journey. If you're excited to learn, hit the thumbs up button before you get started. And if you want to see more content like this, make sure to subscribe to ThinkMarkets now. And if you don't want to miss any of our future videos, also hit the bell button.
So on ThinkMarkets, to access the indicators, you click on this symbol here and you can either search for the indicator if you know the name, or you can scroll down and you can see what they've got. It's all in alphabetical order. If there's one that you particularly like, you can hover over the side here. There's a star symbol. If you click on that, you can add it to your favorites, and then you'll be able to access it more easily. We're going to start off by looking at a moving average, which is a nice, simple, beginner-friendly indicator. Can you see that this line has shown up on the screen now? And along the top here, you can see the indicator that you've added. It says 9 and close. The 9 stands for 9 candles, and the close tells us that it's measuring the average closing price. So this line effectively shows us the average closing price of the last 9 candles. If you go into the settings, you can adjust the length because 9 is actually quite small. Let's look at 50. 50 will show us the average closing price of the last 50 candles. Can you see how it's a little bit further away because it's looking at more candles? A moving average is quite a useful indicator for trend traders because it can help to give you a binary set of rules when you're looking for an entry into a trend trade. For example, if the candles are above the moving average, it could be said that you are in an uptrend and therefore you're looking for buy positions. If the candles are below the moving average, you could be said to be in a downtrend and therefore you are looking for sell position. One thing that's really important is you're going to hear lots of traders talking about different moving averages. And the truth is you really have to play around with the settings. So one trader, for example, could be using a 200 moving average to help them with their specific strategy on a specific time frame on a specific market. Whereas your market, your time frame, it may need a different setting. So the best thing to do is just to play around with the settings and see what works for you. So for example, on this one, can you see that on the 5-minute chart, using the 50 actually works quite nicely because the candles come down and they almost bounce off the moving average. That shows us that we've actually got a really good setting for this particular market. But a 50 moving average might be too sensitive for another market, or it might not be sensitive enough. If you ever want to get rid of the indicator, you just hover over it here and then you click the remove button. We're going to look at another one now. We're going to look at the MACD. The MACD stands for Moving Average Convergence Divergence. So similar to the moving average, which we just looked at, it uses a similar formula because it's looking at 2 moving averages. It's looking at a 12 and a 26. And you can see that you've got these 2 lines here which are crossing over each other, and then we've got the histogram along here as well. It can help us to gauge trend strength, and it can also help us to gauge momentum. So let's break it down because there's actually quite a few elements to it, and there's quite a few ways that traders like to use the MACD. So on the histogram, you can see there's 4 colors. There's dark green, there's light green, there's dark red, and there's light red. It may at first seem like the red shows just bearish momentum and the green shows just bullish momentum. But in fact, the dark green shows bullish momentum and the light green actually shows a slow down in the bullish momentum. So it's actually kind of a bearish sign. The dark red shows us bearish momentum, and similar to the light red is actually a slow down in bearish momentum. So it actually is more of a bullish sign. You've got the point here where they cross over. So where it crosses over from bearish to bullish or from bullish to bearish, this is called the 0 line. And when it crosses over the 0 line, that is also important. Traders will also use the crosses on the lines to help them make decisions. So for example, when the blue line crosses underneath the red line, that can be seen as a bearish sign. And when the blue line crosses above the red line, that can be seen as a bullish sign. The next indicator we're going to look at is called the RSI, or the Relative Strength Index. As the name suggests, it measures the relative strength of an index. You can see it come up along the bottom here. You've got this purple bit in the middle, you've got a white bit at the top and a white bit along the bottom. And along the side here, you've got the strength. So can you see that between 30 and 70, you've got the purple bit, and then above 70, it's white, below 30, it's white. Below 30, the market is said to be oversold, and above 70, the market is said to be overbought. So how traders might use the RSI is that when the market is thought to be overbought, that's the first sign that they might want to start looking for possible reversals and possible sell positions. And similarly, when the market is said to be oversold, they may start looking for a possible reversal or a buy position or just a small pullback. The next indicator that we're going to look at is called the average true range, ATR, average true range. And again, it comes up along the bottom here. If you find that it takes up too much space, you can always make it smaller. The average true range is a really helpful indicator to measure volatility. It can tell you how much the market has moved and therefore how much it's likely to move. And this is really useful when you are trying to decide where your stop loss and your take profit will go, because every market is going to move a different amount in a certain period of time, and therefore each market is going to need a different stop loss and a different take profit. So you can see here the ATR is currently on default setting 14. That means that it's measuring the last 14 candles. If you hover your cursor over a candle, that means it's measuring the last 14 candles. It's adding them all together and dividing by 14 and telling you the average that market is moving. And again, remember that it works differently on different time frames. So at the moment we're on the day chart, which means that the market moves typically at this point around 442 points in a day, which is really useful information because therefore we know how much it's likely to move. But if you go to a smaller time frame, like the 1 minute, for example, you can see that it moves around 10 points in a minute. So always make sure that you're on the right time frame depending on what kind of trader you are. If you're a scalp trader and you're just looking for small moves in the market, you want to be measuring the ATR on a small time frame. You don't need a 400 point stop loss if you're just making a scalp trade. But obviously, if you're a swing trader and you're trading on the day chart, you're going to need a wider stop loss. And the final indicator I'm going to show you is the Fibonacci retracement. If you go along the side on ThinkMarkets here and you click the drop-down menu, you'll see Fib retracement comes out at the top. This one's really cool because it draws on your key levels for you. So if you click on the Fibonacci retracement and in an uptrend, you drag it from the bottom of the downtrend to the top of the uptrend. Can you see how we've only used this point down here and this point right at the top here? But going forward, these levels that it's drawn on for us have been places where there has been reactions from the market. Sometimes the market has a little bit of cluster, sometimes it retraces to these points, and sometimes it bounces off them. It's thought that the Fibonacci retracement works because so many traders use it, it becomes like a self-fulfilling prophecy.
So now you know a few beginner-friendly trading indicators to get you started on your trading journey. The next step is to just have a play around with them on a trading simulator and see which ones work nicely together and for your strategy. ThinkMarkets has a great trading simulator. It's called the Trader's Gym. You can use virtual money to test your strategy, which is really, really helpful before you go live. If you find any good combinations of trading indicators, then please let us know in the comments below. We'd love to know what works for you.